Hello, everyone. In a world where new ideas and chances meet, we have one stock that is about to go on an amazing trip. This isn't just any stock, it's an AI growth stock that's about to split and soar. Squeeze your seats tight as we reveal the secrets that even Cathie Woods is interested in. Yes, you heard that right. We're going to jump right into the insights that could lead to a huge surge. But before we do, don't forget to hit the like button and subscribe to Tesla Stock News. Join us today as we look at the AI frontier through the eyes of famous fund manager Cathie Wood. Tesla buyers are going to get a lot of money in the next few years. The stock symbol for Tesla, tsla, has gone down a small amount, 1.57%, but the company did a 5-for-1 stock split in August 2020 and a 3-for-1 stock split in August 2022. These splits show how much the stock price has gone up in such a short amount of time. Over the past 5 years, the stock price has risen by an amazing 1,230%. This huge increase means that a $10,000 investment has turned into an impressive $132,000. While stock splits usually don't have a big effect on how a company runs, they can send important signals to investors when they're done to get a big and long-lasting rise in share price. This kind of action usually means that the company has strong fundamentals and good growth prospects. Doubters of Tesla some might say otherwise, but Cathie Wood thinks the company has a lot of potential. Earlier this year, ARK Invest, a forward-thinking asset management firm that focuses on innovation, released a valuation model that includes a crazy bull case scenario that predicts a target price of $2,500 per share for Tesla by 2027. This would mean a huge 80% gain for Tesla shareholders in just over 4 years. The question now is whether this prediction is realistic. The well-known electric car company, we learn more about its impressive accomplishments and bright future. Tesla has a huge lead in the global market for battery electric vehicles, with 20% of all BEV sales as of July. This is 5 percentage points more than its closest competitor. But Tesla's dominance isn't just limited to BEV sales. It's also one of the most profitable companies in the automotive industry as a whole, as shown by the fact that it had the highest operating margin among high-volume automakers last year, which CEO Elon Musk said was due to the company's superior manufacturing technology for investors. The chance of continuing to make money, and maybe even making more, it's on the horizon, is supported by 3 strong factors. First, Tesla says it can make battery packs, which are the most expensive part of an electric vehicle, for less per kilowatt hour than any of its automotive competitors. This competitive advantage is expected to last for the next 10 years, according to Cairn Energy Research Advisors. Second, Tesla has big plans for its Gigafactory in Mexico, which is currently being built. This facility will use a new way of making cars that could cut costs by 50% and cut the factory size by an amazing 40%. Finally, Elon Musk, the visionary CEO of Tesla, wants the company to have gross profit margins of almost 70%. This big goal comes from the fact that full self-driving software and more robot cab services are going to be built into Tesla's business model soon. If they are successful, it will be a huge jump from the company's current gross profit margin of 21.5%. Tesla has changed a lot since it became an AI company. It used to be known for making great electric cars, but now it's getting ready to become a big name in AI software and services, with its full self-driving platform being the key to this change. Tesla sees 3 different ways to make money off of its self-driving technology. First, it plans to offer drivers FSD payments that give them access to cutting-edge self-driving features. Second, Tesla wants to license its FSD software to other automakers, which will give it a bigger impact on the auto industry as a whole. Third, the company has big plans to use its FSD software to power a fleet of robot taxis, which is a very exciting idea for self-driving cars. Tesla is currently the leader, with a large number of FSD-enabled vehicles already on the road. The company collects more data than any other carmaker, with Cathie Wood, a well-known investor, says that Tesla has more data on autonomous driving than all of its possible competitors put together. Services, which are expected to bring in 34% of revenue, are a key part of this situation, which shows how important Tesla's self-driving cars are becoming. 20% of revenue comes from different sources, such as energy storage and insurance. Bringing attention to Tesla's multiple sources of income, in the base case Tesla's stock price soars to $2,000 per share in 2027, representing a huge $669 per share upside potential. ARK's projections show that Tesla will reach a significant revenue milestone of $1 trillion in 2027, with electric vehicles still making up 47% of all revenue. This shows that Tesla is continuing to grow in the electric vehicle market thanks to its innovative technologies and growing product portfolio. Notably, robot taxi services make big steps forward, accounting for over 44% of revenue. The company's strong annual revenue growth rate of 69% shows how well it can use its self-driving technology to shake up the transportation business. The last 9% of revenue comes from different sources, which shows how strategically diversified Tesla is. Finally, in the best-case scenario, Tesla's stock price skyrockets to an amazing $2,500 per share in 2027, giving investors an unheard of 88% upside potential. ARK Invest assumptions for this scenario show Tesla reaching a revenue peak of $1.2 trillion in 2027, which shows the company's incredible growth trajectory. Electric vehicles and robot taxi services together bring in the lion's share of revenue, accounting for 48% and 49%. This shows that Tesla has a strong marketplace in both the electric vehicle and self-driving car markets. The company's amazing 76% annual income growth rate shows how well it can use its cutting-edge technology and take advantage of new trends. The last 3% of revenue comes from different sources, showing that Tesla is able to discover and make money from a wide range of avenues. The three possible outcomes, which vary in how optimistic they are, paint a complex picture of Tesla's future. They show how the markets for electric vehicles and self-driving cars are changing, and Tesla's ability to thrive in these changing environments. Investors thinking about investing in Tesla need to weigh these outcomes against their risk tolerance and long-term investment goals, keeping in mind that the company's path is still a mix of innovation, market dynamics, and execution. ARK Invest's careful valuation model gives investors a wide range of possible outcomes, showing Tesla's amazing growth prospects across a lot of different scenarios. These predictions show that the company has a multifaceted strategy that includes electric cars, self-driving technology, and other creative ways to make money. Even more as we think about whether Tesla stock is a good investment, let's keep our faith in the company's bright future. It's clear that Cathie Wood and Aaron Vest's complete valuation models are very helpful. But when you look more closely, the assumptions that all three scenarios are based on do seem rather lofty. Tesla owners could get returns ranging from 438% with amazing 80% by 2027. This may seem like a lot of money, but there is a strong case to be made. The possibility that Tesla will move into fully self-driving software and robot taxi services is a disruptive force that could change the transportation and mobility industries. If this change is made successfully, it could open up new growth possibilities for the company that have never been seen before. It's also worth noting that Tesla's current valuation, with shares trading at 9.6 times sales, is lower than its 5-year average of 11.2 times sales. This makes it seem like the stock may be undervalued right now, which makes it a good deal for investors. But it's important to be aware of the risks that come with investing in a company that is known for innovation and instability. If you're a patient investor who's willing to take calculated risks, you might want to start a small position in this growth-oriented stock. Ultimately, the decision to invest in Tesla depends on your risk tolerance and faith in the company's ability to make its big transition successfully. That's all for today. We've been on a journey through the many sides of Tesla, from its amazing growth in the electric vehicle market to its bold plans in the areas of AI and self-driving cars. Besides that, we've also looked at the complicated ARK Invest valuation models, which show a range of possible results for Tesla's future. Before we end, let's think about a few important questions. Can Tesla reach its lofty growth goals, or are they too optimistic? How will Tesla's move into AI software and robot taxi services change the transportation industry? What role will innovation and new technologies play in shaping Tesla's future? If you found this movie interesting, please like and share it. Also, follow Tesla Stock News to get more news. Thanks for watching and see you next time.